Right now, the silver market is in one of the most emotional and volatile moments we've seen in years. Prices are sitting above $50, gold above $4,000, and traders across the world are trying to figure out, is this the top or just the beginning? Let's go through what the experts are posting, one by one, and I'll explain what's really happening behind the scenes.
Let's start with this post by Peter Schiff. Today is another example of why Bitcoin is not digital gold or even digital silver. Gold closed the week up 3%, above $4,000, and silver rose 4.4%, closing above $50. Both represent record-high weekly closes. In contrast, Bitcoin dropped over 5%, double the decline of the Nasdaq. Peter's making a strong point here, and whether you agree with him or not, the numbers speak for themselves. Gold and silver just hit record-high weekly closes, while Bitcoin struggled. His argument is that physical metals, unlike crypto, have real-world demand and decades of historical trust behind them. This moment really highlights how differently these assets behave during times of financial stress or uncertainty. Now let's look at this post from Hansa Czerny. Reflection: what if China's negative silver premium means something else? Lately, the Shanghai Gold Exchange shows both gold and silver trading below international prices. Silver premium minus 4%, gold premium minus 1%. It's a reversal. For months, China was paying above global prices for physical metal. This is a very interesting observation. Normally, China has been paying above the global price, which shows strong domestic demand. But now it's flipped. Prices in Shanghai are lower than in the rest of the world. That could mean several things. Maybe Chinese buyers are stepping back temporarily, or the government is managing imports differently. Either way, a negative premium often signals a shift in physical flow, and that's something traders and analysts should keep a close eye on. Patrick Kareem sums it up perfectly. Silver, roadmap to $100 unfolding before our eyes. Patrick's known for his long-term technical charts, and this short post captures his outlook in one line. With silver breaking above $50 and showing massive strength on the charts, his roadmap to $100 doesn't sound unrealistic anymore. It's bold, but when you look at the broader setup, rising demand, tight physical supply, and global economic uncertainty, that path might already be forming.
Post by KK Kern. Silver still in the overbought trend, watching the 5 EMA here for signs of weakness. This post referring to the same key technical signal, the 5-day exponential moving average. When traders say silver is overbought, it means price has gone up too fast too soon. But watching the 5 EMA means they're tracking whether momentum will hold or break down. If price stays above that 5 EMA line, the rally continues. If it drops below, that's usually an early sign of correction or short-term weakness. In simple words, this is the calm before a potential move, either the next leg higher or the first crack in the uptrend. Post by David Bateman. The problem in today's financial system is too few have held real gold and silver bars in their hand and felt the sheer energy and power of God's money course through their body. This knowledge doesn't come academically. It must be felt and experienced. Go visit your local coin dealer. You'll feel like an autistic kid at a crystal shop. Hold a 1 kg gold bar to your heart and feel it pulsate. That's the shit. You won't settle for horseshit paper gold and silver ever again. Now, behind the colorful language here, what David's really expressing is something emotional, the difference between paper and physical ownership. He's highlighting how most investors today trade silver contracts or ETFs, which represent paper silver. But physical silver, actual bars or coins, gives you a sense of real ownership outside the banking system. It's less about the energy and more about the trust issue. In times of financial instability, people don't want promises. They want the metal in their hand. Post by Make Gold Great. The London free float of silver is free of any float. This one's a clever play on words, basically saying the available supply of silver in London is gone. The free float means the amount of silver available for immediate delivery or trading. If it's free of any float, it means there's little to no available metal left. That's a serious issue because London's LBMA is the heart of global silver trading. If supply there tightens, prices can spike fast. Post by Tim Hack. I remember very well the immense heat I got in April when I called for $50 silver end of summer. Back then it was at $29. A massive thank you to my haters, you fueled the rise. Tim celebrating a massive call, silver moving from $29 to $50 in just a few months. That's not just price movement, that's a 72% surge. What's interesting here is how sentiment flipped. Back in April, most analysts laughed at the idea of $50 silver, but the combination of tightening supply, record lease rates, and central bank gold demand has completely changed the narrative.
Post by Dow Gold Equal. I have been beating the silver drum since 2021, and I am pleased to report that we have achieved an ATH above $50 on a weekly closing basis. We need to see this on a monthly, quarterly, and annual to add confidence to my big picture targets. But this is a start. Congratulations. This post shows a longer-term technical perspective. Yes, silver has closed above $50 on a weekly chart. That's huge. But he's saying for true confirmation, we need silver to stay above $50, not just for a week, but for months and quarters. That's how a bull market becomes a new trend, not just a spike. Post by Gold Silver HQ, gold back over $4,000, silver back over $50. Stocks are tanking. Beautiful. Here the message is clear. A rotation is happening. Investors are moving money out of stocks and into hard assets like gold and silver. When both metals rise while stocks fall, it usually means fear is spreading. People are seeking safety in tangible assets. Post by Make Gold Great. China's almost ready to reveal its gold card. This could be a major catalyst. It hints that China may soon make a move related to gold, possibly a gold-backed trade settlement system, or revealing the full extent of its central bank gold reserves. Either way, if that happens, it could redefine how global trade views gold as money again, and by extension, silver too. Post by Eric. 3.7 million troy ounces of silver is 115.08 metric tons of silver. They will need way more than 115.08 metric tons of silver, or even 10x of that, to save the LBMA. Eric is talking about how much silver might be required to stabilize London's bullion market. The LBMA, London Bullion Market Association, runs the largest pool of traded silver. But if physical demand keeps rising and inventories keep shrinking, even 10 times that amount might not be enough to restore balance. That's how tight the physical market has become. Post by James Henry. London float is about 120 million ounces, but no clues whether any is available at any ridiculous record-high silver lease rate spikes to come. He's confirming the same fear, that 120 million ounces may exist on paper, but it's unclear how much is actually available to lease or deliver. With lease rates already exploding over 30%, it means banks are desperate to borrow physical metal. And when the float dries up, the next move is simple. Prices explode upward. So what we're seeing is a historic squeeze. Silver above $50, gold above $4,000, and the London market running on fumes. Technical traders are watching the 5 EMA, long-term investors are demanding physical metal, and geopolitical pressure from China could push this even further. This isn't just a rally, it's a reflection of a broken trust in paper money and paper assets. Disclaimer: this video is for informational and educational purposes only. It does not constitute financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions.